Hello friends and welcome to my YouTube channel Simply Stocks, and today I'm going to talk about some of the best companies in the medical diagnostic space that have come down from the top and are at attractive levels that one can look to buy from a 3-4 year point of view. So let's get started. First order disclaimer that this is not a stock recommendation. People taking any position to any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Before I talk about these medical diagnostic companies, a small request to kindly support me on Patreon. And once you do that, help me grow the channel, help you also ask me questions and eke out answers in greater detail. Once you get the $10 membership, you'll have access to my portfolio, my watch list, and number of podcasts as put up from time to time. And also, if you can pay $100 upfront, you get 1 year access by paying for 10 months. For detailed market or company talk, you can directly email me and we can work things out with a fee. And also, if you cannot pay on Patreon, you can join the YouTube membership and you get all the updates on of Patreon on YouTube as well. Now about the criteria, these are established brands and strong management. So they are diversified into different segments. Yet they are market leaders with low debt, virtually no pledging, and return ratios and numbers are pretty good. So these are solid companies with very good track records, management, etc. And if there is an issue with any company, I'll just mention that in the video itself. Now about the allocation, you can put around 5 to 10%, no more than that, maybe 6-7% in each of the stocks. Probably you can mix and match with your, you can say the best of the stocks, say the large caps, Reliance, etc. that you buy, Tata Steel and all. The large caps that you buy, you can mix and match with these mid and small cap companies. Probably pick 2-3 of these and have 7-8 of the larger companies, and you can mix and match and hold for 4 years at least. It should grow at 25% from these levels. 25-27% CAGR is very much possible, and keep a strict stop loss, probably 20%, 30%, 15%, whatever suits you with regard to stop losses, whatever suits you, that okay, you are not going to take losses more than that. So that is something that you can probably do. First in the list is Dr. Lal Path Labs. Now, this is a forgotten stock at the moment with the pandemic gone, but the stock has corrected appreciably from the top, and currently it is trading at around 3,000 rupees and very much in you can say less than 3,000 rupees. It has come to I think 28, 27, 2,800 rupees. Market cap looks very attractive. See, valuations were stretched when I made the presentation about a week, 10 days back. In the last 10-15 days, the stock has come down even further. These are very good levels to start accumulating the stock, and maybe at lower levels to 25-2600 you can buy more. It is the leader in the Indian diagnostic market. We all know about it. It's basically become a consumer centric stock, and over the next 10 years can become huge if they expand. They have not expanded that much, so probably going forward they are set to expand even further and should do well. They're gaining market share in every quarter, and probably once they expand into southern India, they'll have a better moat going forward. One of the, you can say, a monopoly kind of diagnostic firm in this space. So it has consolidated for a while and is ready for the next move. Probably after touching 25-2600 it should move higher. I think the decline has been a lot, so one can accumulate at these levels. Second in the list is new Reika. Now this is interesting. The results have not been that great for the last quarter, but it has been a growing medical equipment player, a stock, a company that sells online and does extremely well on that front. It has done very good sales over the last 3 years with respect to selling products online. Yes, there was a fillip of the pandemic, and that's why the company did extremely well in the FY21, you can say, financial year. But going forward, the earnings will probably stabilize. It won't be the same as FY21, and that's why the stock prices have fell so much. But this is something like, this is a darling of a large investors, and they have put in huge money. Yes, there is selling from FIIs. We have to see how the December, you can say, shareholding pattern pans out, but it's a strong management. Return ratios are very good. A low debt company, no pledging, and it has been gaining market share as products are becoming part of every home. You have oximeter, etc., that are being bought here and there and everywhere, and people are becoming more health conscious. They want to have some of the tests done at home. They can do it easily, so they are buying products. So this will continue to happen over the next 4 or 5 years. This company should grow pretty well. Previous Denpro. Now this is interesting. This is a stock that I had earlier in my portfolio, but now I don't have it. There's a reason for that. I'll discuss that later on. But it's a leading player in the dental space, probably the only player in the dental space that we currently have. It has grown at around 40-45% CAGR. The results have been extremely good for the December quarter that they have come out with, and the stock has done well. It's around 400-420 rupees. It exports to more than 70 countries and have got US FDA approval also. Probably that exports will also take place. It has an ambition to do sales of 500 crores by 2030. That's what the management has come out with. So I think this can end up being a 3,000-4,000 crore market cap company over the next 10 years. But there is a issue with the company, and that's why I have not bought into it. With the management salary, which is around 27-28% of the profit, and that is huge. I mean, I think 27% of the revenue. So 27% of the revenue going as salary is a huge context. No more than, I think, 2-3% should be going there, or maybe 5, maximum 10. But here 26-27% of the revenue part is going into salaries, which is a huge part, and that is why I have avoided the stock. So you can take your own call here. There is risk attached with the stock, especially after the up move. So I would suggest that wait for major market downturn to probably get into it at 250-260 if it comes there. Otherwise it is expensive with the kind of risk attached with the firm. Fourth in the list is Medicare. This is a very renowned company, and that has been listed for many years into the market. It's a fast growing medical appliances company and doing well in the competitive market. It has corrected from the top, so we have seen a 25-30% correction from the top. These are decent levels to probably accumulate the stock. It's a debt free, strong management company. There is strong institutional investments here, and remember that these stocks, you don't have to buy all five of them. Probably you can pick two or three, and Polymedicure fits the bill in the top five companies in the medical domain. So more traction is expected as more people become health conscious, and we'll see numbers only improve, and the valuations have become better at this point of time. The final stock in this list is Skillpest India, and it is a leader in the testing kits of all sorts, and they produce testing kits and sells abroad, especially in Central Asia, you say Europe and Africa. It has captured clients across India as well. And yes, there is a thing that the numbers are not the same as the pandemic year, but I believe, and a disclaimer, I have the stock in my investment portfolio. I believe that going forward in FY23 it should come out with an EPS closer to 26-27 rupees. Based on that, the company is trading at only 14-15 times earnings, which is extremely attractive. It is the only firm in India to have export approval for America for the kits, which they intend to sell in the near future, and will perform well as export restrictions get lifted, which have been lifted. So they are trying to get bulk orders done, and probably in the foreseeable future, in the next 2 quarters, we'll see that happening. Plus there is a chance of a listing of an on NSE of the company, and 3B Black Bio merger, etc., so that the company will be a biotech company. That will also take place over the next year and a half. So a lot of triggers left. The stock has come from 770 all the way to 380 now. It has corrected some 50% from the top. Very interesting levels to get in, but you need to show patience of the next 4-5 years to really make good money into the stock. So this was a video on these stocks. Please like and subscribe my channel. Thanks a lot.